If you've been feeling like the ground is shifting under your feet in the investment world, well, you're not wrong. We are right in the middle of a major market reset. And today, we're going to break down exactly what that means and, more importantly, how to navigate it.
This isn't just some catchy phrase. It's the absolute reality for 2025. The strategies that gave us predictable returns for years, just buying and holding blue-chip stocks, they're really struggling in this new environment of high inflation and geopolitical friction. It is definitely time for a fundamental rethink.
And that is the million-dollar question, right? It's exactly what we're here to answer. We're going to lay out a clear, actionable playbook for this totally new era. But first, before we get to the new rules, we really have to understand why the old ones are failing. So let's dig into the forces that are completely reshaping the entire global economic landscape. That predictable cycle we all got so used to, low interest rates, steady growth, it's gone. It's been shattered, really, and replaced by what you could call a mosaic of risks. Think of it like a super complex puzzle where all these different pieces, trade tensions, conflicting moves by central banks, and crazy fast tech changes create a much, much less certain picture.
Okay, so let's dive into this a little deeper. What are these specific global forces causing all this disruption? They're creating what's essentially a global pressure cooker for anyone trying to invest.
And just look at this, even the top experts can't seem to agree. On one hand, you have the IMF seeing some modest growth, but then the World Bank comes out with a really stark downgrade, and they're forecasting the weakest growth we've seen since 2008 outside of a major recession. So why are they so pessimistic? Well, they're pointing directly at rising trade barriers and tariffs that are just fracturing global supply chains. This uncertainty, it's a huge part of the new normal.
This chart really drives the point home. The recovery isn't happening everywhere at the same speed, not even close. While the global average might be hovering around 3%, you've got key regions like the euro area that are struggling to even hit 1%. This unevenness means you just can't bet on the whole world rising together anymore.
So you can see how these four major pressures are all feeding into each other. You have escalating tariffs and geopolitical conflicts which disrupt supply chains. That, in turn, helps keep global inflation stubbornly high. And what happens then? Well, central banks are forced to stick with that higher-for-longer stance on interest rates. It's a really challenging mix that makes navigating the markets incredibly tricky right now.
But, it's not all doom and gloom. Amidst all this global turbulence, some economies are actually emerging as these beacons of stability and growth, and they're offering a really compelling alternative. The most prominent example right now? India.
Just look at that number, 7.2%. When we just saw the euro area struggling below 1%, a number like this is a seriously powerful signal. It highlights that real growth is shifting, creating these incredible bright spots for investors in what is otherwise a pretty slow world.
And here's the other crucial part of the story. That amazing growth isn't coming at the cost of runaway prices. Projected inflation is actually below the central bank's target. That combination is just incredibly powerful. So you got to ask yourself, how are they pulling this off?
Well, it really comes down to this, the Reserve Bank of India's neutral stance. By holding its key interest rate steady at 5.50%, the RBI is basically signaling massive confidence. They're telling the world, hey, we can support growth without sparking inflation. And for investors, what that means is a stable currency and some really attractive opportunities in an otherwise chaotic global market.
Okay, so we've seen the problem. The old rules are broken, and we've seen a huge opportunity in places that are offering both growth and stability. So how do we put it all together into a concrete strategy? This right here is your new investing playbook for 2025. Now, what's really interesting about this slide is how it connects the big, macro picture directly to your portfolio. Let's take a second here. So, for example, because inflation is so sticky, central banks aren't cutting rates as quickly as everyone hoped. The investment implication? You might want to look for yield in places like emerging market debt. Or think about this reshoring trend. As companies pull their supply chains out of China, countries like India and Vietnam are benefiting big time, making their export sectors a pretty smart bet.
So here it is, the core takeaway, all boiled down to 5 new rules. It starts with embracing what's called emerging market alpha. That's the potential for outsized returns in these high-growth areas. This could mean allocating a bigger chunk of your portfolio to places like India and Southeast Asia. Then, it's about going thematic, investing in big megatrends like AI instead of just broad indexes. You've also got to hedge against shocks, find reliable income in bonds and dividend stocks, and, this is maybe the most important, stay flexible. This is not a set it and forget it market anymore.
Look, all of this might sound a little daunting, but the key is to reframe how you're thinking about it. This market reset isn't just a series of threats, it's actually a massive opportunity for anyone who understands the new landscape. And that's really the final message here. 2025 is a recalibration. You have to ditch the old assumptions, follow the new rules we've covered, and you can position your portfolio not just to survive this thing, but to actually thrive in it.
The rules of the game have fundamentally changed. The market has officially been reset. So the only real question left is, have you?